Welcome to No FOMO Charts YouTube channel, live stream number 14. Today is Friday, January 15th, 2021. This channel I talk about stock charts and technical analysis education. Quick disclaimer, these videos and charts are for educational purposes only. This is not financial advice. Also, there's a lot of background noise today. The outside weather is pretty noisy in the background, so bear with the audio today, please. Okay, let's start with the DJI, the Dow Jones Index. To change the title here. 1 second. Okay. All right, so Dow Jones Index. Before we begin with stocks, just remember that we are starting earnings season for 2021 this past week. It just basically started on Thursday, yesterday, making this video. We have financial companies starting, Wells Fargo, Citibank, etc. reported earnings today. And so we're seeing a little bit of market reaction to that, actually. We'll just zoom in really quick because I want to talk about that really quick. So we're talking about today and yesterday. All right, so we're still in the uptrend right here. What I didn't do last video, and I'm going to do this video, is start drawing more support, resistance, and trend lines for people. Okay, because last week I explained what uptrend or downtrend is. So now that should be clear to other people, I'm going to start drawing support and resistance. Okay, so even right here, if you zoom way in on the Dow Jones Index, okay, there is a double top resistance right here at 31,110. Mark it there in the yellow. Okay, so we have that horizontal resistance on the price. Also, the immediate support levels, 30,638, and then some kind of inflection point somewhere right here where you see where all this price is chopping around, right? It be resistance and then support and then resistance, support. Okay, so that's probably going to be an interesting support level. There's that. Also, we start drawing trend lines under here, trend line support underneath. Okay, do you see this now? Make these lines a little smaller for people so we can see that. All right. So to me, this would make sense if the price falls down to this lower trend line level, like 30,000. Excuse me, 30,500 range. Okay. So also there is a gap window support. Okay, very fundamental lesson here. Gaps in the market, on the stock market, can be areas of resistance and support. Okay, so this is the big support level, this range, 29,117 to 28,423. Okay, so those are our general levels in this market. All right, so that's how we basically do support and resistance levels. Also, there's an old support level at the prior all-time high over here on this side. Okay, so now we have all these zones. You see how we use support and resistance horizontal and then diagonal trend lines to start closing in this price. Closing in the price. So now we have this up channel. Okay, like going angled up, like 45-degree angle up channel. All right, the price just bouncing around in there, textbook style, okay? But remember, we're in earnings. So in the next coming week, we have financial earnings and tech sector earnings. And then the end of January, we start really getting a lot of tech sector earnings. And then the whole rest of the market. So these first 1, 2, 3 weeks of the earnings is going to be quite important for the market. Okay, so We'll just watch out for that. Little downside targets. Possibly pull back down to this range. Maybe a pull back down, and then maybe eventually, if we have good earnings or good uptrend continuation, we might hit one of those two levels in the market. All right, so looks like from today's price, plus or minus 2% in the market is totally possible. Totally possible. Okay, but just remember, in the larger term picture, if we zoom, we're on a daily chart. We zoom out to a weekly chart and leave this analysis alone, the lines we just drew. We're still in an uptrend. Okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So then the next logical flow of the higher high, high low pattern would be 29,538 or 452 range. Okay, basically the old all-time high, like 29,000, mid 29,000s. We bring this line back right there, it'd be here. Okay, this line right here, I'm shaking it right now on the charts. So a pullback down to there could be totally possible, and we're still in the uptrend. Okay, so that's how we do that style of analysis. All right, so I'm going to go a little bit faster, okay, on the rest of them, because basically these charts look very, very similar for the most part. So we're on the S&P 500 daily chart. S&P 500. All right, the same deal applies. Let's get the resistance in there first, and we get immediate support of the price. The secondary support level, third support level. How am I finding these price levels? I'm looking left from experience. If this is nothing over here, there's just, if this is the all-time high, then I look at the most recent price. So where is the price hitting the most spots? More touches, the stronger the resistance or support price level. So right there. Here, there's some zone in this general area. There's touch point here, 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 and here. Then this zone used to be a resistance, became support 2 times, so that's a big level as well. Okay, so then we get the trend lines in. So there's a short-term trend line here on a daily chart, just like the other chart. Then you connect these points as much as you can to get the top side resistance. Now, actually, this one can be a little tighter, so I'm going to drop it down. So we get a really, really tight resistance on the charts that's actually accurate for the price. Okay. Now, our resistance and support levels, nice and tight on the charts, looking good. Accurate, I mean. Okay, so now that we got this going on, again, short-term uptrend, short-term uptrend. Little bit of a very, very short-term double top pattern here at the price. Again, people not sure what's going on. And keep in mind that if you're in the USA, I mean, there's tension in the nation right now. I'm just going to call it that. There's some, global situations happening. So that's affecting people's lives every day, and that affects the stock market, that affects the economy. We have earnings ongoing, we have pandemic, we have vaccines, we have presidential transition, we have, weather problems, polar vortex all around the world, or some parts of the world right now. So, there's that problem. And, it's the start of 2021 as well. So it's just like all these factors happening in the world right now is affecting the market. Also, we have Biden's party $2 trillion stimulus that's probably, or that was announced. I shouldn't say anything about it, but it was announced on the news. Who knows when it's actually going to happen, but it might, right? So, that's keeping the market alive a little bit, but it's okay. We could pull back totally down to 3,733, and we're still in this uptrend. Okay, now that we have this analysis going, now we switch to a weekly to see. Let me escape out of this. So weekly, right? Still in this uptrend. We could totally pull back down to the 3,500 range, the psychological number. This bottom support right here. Okay. So it's interesting. It's kind of like this little offshoot in the weekly chart just going in the uptrend. So very interesting. All right, speed this up. So again, this was from last class, just super, super broad targets, right? Of saying, well, the big psychological number on the NASDAQ, IXIC, ticker number 3 now is 14,000. We said that last time. And we said this general range of the 12,000s was the previous resistance. Can you see this now? If I put the mouse over here, actually I should highlight it. The price rejected 1, 2, 3 times, then broke out the 4th time. And then I was saying, if you do higher high, high low pattern, high, low, high, high, well, basically a high, low, high, then at some point we're going to get another low, higher low up here. Okay, that's how we were able to forecast that we're probably going to get a pullback down. Now exactly where is where we set the targets now, a little more accurate for this class, for this stream. Again, if we put the resistance up there, all right, we know we have this resistance point down here. There's also one right in the middle. And there's one down here as well. I don't want to draw too many lines though. People might get confused. So let's get another trend line going. See, this one's a little tighter. It's just about to come down to that trend line, and it's going to be tested in the earnings coming up in just about a week or two. In a week, basically. Actually, on Monday it starts. Tuesday, technically, it starts. The Netflix reports on Tuesday. So, boom, this is happening. Okay, if we happen to drop down out of this zone, let me change the color of the pen to something like a blue. Okay. So the colors aren't weird. No, so it's the price is in blue, right? If we pull back down out of here, then we want to watch for what could happen. Maybe we could get upside down. I mean, regular head and shoulders, right? You see this reversal pattern down. That could happen. This M could play out down. Let me draw it over here. M could play out down. It could turn to head and shoulders. It could turn into just like a double top, or just could do textbook, pull back down, retest, and start downtrending if there's major problem, which there may or may not be, right, on the tech sector. But given the political global situation, maybe we're already seeing some of these tech names start to pull back already right before earnings. Very suspicious on the price charts. All right, so weekly right here. All right, so you see how the NASDAQ just really boom, higher high, higher low, higher high. So in a weekly, we could pull back all the way down to like 11,800, 12,000, even just somewhere like halfway or down here, and then still continue up in the next year, right? So I'm not super scared. I'm not nervous about anything in this market right now. It's really painfully obvious on charts to traders. So now we could have this bounce, or if there's a major problem, maybe that. But, earnings, we'll just watch the earnings. So these are the key levels we're looking at. Okay, so because tech earnings are coming up, let me put some targets on here. So again, that's still the ultimate bullish target of 14,000 is still up here. Okay, so that's the bull target. That would be somewhere over here, right? If it's a bearish target, the first support level is 12,740 right there. And then if we lose that level, the next target's down here. So all we have to do is watch for the price momentum. Is it going to crash down? Is it going to do this? Is it going to go up? Uptrending continuation to hit the top of this channel? Are we going to break down below this channel? We have to see with the earnings. Okay. All right. Try to move a little faster. It's 15 minutes already. Russell 2000. Here's a really interesting use of trend lines to the upside. Okay, so if you know on a daily, we're still in this uptrend. Weekly chart, we're still in this uptrend. Okay. Daily. Going back here. Now, it's interesting to see there's a very, very steep trend line here, like that. Okay, when you get steep trend lines, I mean, what goes up has potential momentum to come down. Physics even in the stock market, gravity. So at some point in time, right? So again, very, very super steep like that. So the support and resistance levels, we get support 1 here at 2000, support 2 1926, resistance here at 2150. Why are those numbers important? Well, if we start to lose these levels, we can see Russell 2000 pull back quite significantly because the next level is 1705, 1705 as such over here. Okay? But again, if we try to look at the price pattern and be like, what's happening here? Try to analyze this. We could easily pull back to the bottom right here. So this is going to be the first bear downside target, 2000 range. Because X marks a spot, we have a trend line and a support level crisscrossing right there on the X. So that would be a suspicious spot. Also, if you look here, high, low could come right into the zone right there. Possible on Russell 2000. Okay. So I could see something like this happening, and then if we survive earnings, hitting this next target to the upside here. So somewhere in like 2,300, that's right, range as the upside target. All right. Then the really, really bearish downside target would be 1,700 up here, and maybe a stronger bull target would be 2,500 up here. I'm giving wide targets on Russell because it has a little bit more volatility compared to the other indexes. It's a small cap business index. So we'll watch that. It's still in the uptrend though, right? If you just turn this off for a second and clear our minds, higher high, higher low, higher high, higher low. It's looking for the higher high. Where's it going to go? And we just marked it, right? It's attempting to break these levels if possible, and then it come down to establish a higher low. So we'll see with that. All right, I'm just going to do these other ones a lot faster. All right, so VIX, everyone's talking about VIX right now. Everyone's talking about dollar currency index. We'll get to those. Actually, right back to back. Okay, so VIX, the VIX, volatility in S&P 500 index based upon options. Or in other words, the fear index. Is the fear going up or is the fear going down? So right now, we do have immediately right now, we are seeing this one-day chart. We are seeing support at the $21 range. Okay, very strong support. 1, 2, 3, 4, 5 touch points, and used to be a prior resistance over here. So that's a strong spot. Also, what I drew up above is we have a strong, basically at least 2 touch points. There's a third one in here. Maybe I'll draw this one. Might make more sense. Right, with multiple trend lines on the top. Okay, so if the market does pull back on earnings, VIX volatility would increase. The fear would increase, volatility increases, and therefore this would go up. So let's say from current levels, anywhere from 10 to 20% possible. Right, because I'm looking left basing off prior resistance levels. So there's this one and there's this target right there. So we have to see what's going on. Is this a potential upside down head and shoulders? Possible. Or is just, a double bottom support zone? Possible. Right, so those are all price chart patterns that are very visible on this chart. If we switch to a weekly, yeah, there is that, sort of that double bottom support over here for the past about maybe 4 or 5 months. Excuse me. All right, so let's go to DXY, dollar currency index, what everybody's always talking about right now. Why is it important? Because the dollar currency index, similar to like a VIX chart in that, the way I think about it, and I said this before, is that the dollar currency index is kind of like a gauge of, cash spending versus saving type of idea. Cash spending versus saving. And are people wanting to spend their money or people wanting to save their money? And that affects like the stock market and the economy. Okay, so basically we'll see the first immediate thing right now on DXY is possible upside down head and shoulders reversal. Possible, because when we had this one, this is a much larger one, played out over many months, then we got that first breakout. But here it's important to know that it turned into a downtrend. See that? Lower low, lower high, lower low, higher high, but then lower high, lower, excuse me, I got it reversed, but you get the point. Lower low, lower high. Basically going downstairs over time. But then we have another potential reversal signal, which I'm a little concerned about right here, another upside down head and shoulders. So if we measure this, 1.5%, will bring us back over here to hit this resistance level. Okay, so now we're playing with these three levels now in the dollar currency index right there. All right, and then we could also use the trend line. There's a trend line here for a potential ceiling, and there's a trend line here that was broken. So it's a little significant what's happening right now in the dollar currency index. Possible giving us a warning about earnings and the stock market. Possible. Okay, it's not for sure. Okay, because earnings is not priced in yet. The expectations might be priced in, but earnings hasn't been released for all the companies yet. So, let me just draw this for the next class to see if this plays out. Right there. And this is the target. Downside target would be down here. All right, so it's either going one of those, but there's a little bit more evidence that is pointing that this is going to reverse up. Okay, gold spot US. Let me start over. Gold spot USD. All right, so right here. So boom, resistance. There's a big trend line resistance up there. And there's this one here. I'm drawing trend lines because you can see the price is like angling down. That's why I'm automatically trying to draw people's eyes to that. Right? So it's kind of like this broadening formation. I'm actually not going to use this top one because this bottom one has 2 touch points and a Pierce test, which failed. So it's basically 3 touch points on each side. It's like this reverse open broadening wedge in my mind, right? I'm not going to get too into the textbook definitions. It's just basically what's happening. It's broadening, fanning out pattern. So again, if we lose momentum on gold, okay, the obvious target would be like somewhere here in this price range, 1725, right there, okay, because on the left side, there's a lot of price cluster. All right, and then if it reverses up and this turns to upside down head and shoulders like that, then the upper price target would be 1900, a nice round number as well in the market. All right, if this does turn to upside down head and shoulders, and this is the right shoulder right here, and we're finding support, then this head and shoulders will come into play. 8% from the neck breakout. Let me draw this. If this happens, and then this happens, we have to break the neck right here of the neckline of the chart pattern. Okay, of head and shoulders. Then 10% would send us to like upper 2100 range over time. Okay, if this is a bullish call. If it's a bearish call, then it would be interesting to see the actual reverse of that negative 10% from, let's just say, the midpoint where we are right now. Like a bullish call would be like 1645 down there. And that would also correspond with a little bit of price action over here in this previous area zone. So there we go. All right, but I'm not going to call it upside down head and shoulders until I see the reversal sign. But so for right now, this is what it's looking like to me. Also immediate support and resistance right there. So now we're stuck in there. Right, but again, at the same time, if you zoom out though on gold, it's still in a more of a weekly uptrend. Right, you see this now, high, low, high, low, high, low. So it could just be looking for like a higher low support level, and we draw this large trend line. Let me adjust this right here. Draw this large trend line as such. So very suspicious, right? If you use this trend line, it's like, well, you could totally come down to The 1725 area, okay, it's not impossible, and you're still in the uptrend as part of a larger wave bounce like this. High, low, and then in the second half of 2021, you'll see a recovery possible, right? Totally possible. That's why we look at charts. Forecast it. All right, I'll try to do these ones faster. All right, so there was that old chart pattern on silver. So now silver USD. This is interesting, right? You could already see the price resistance, boom, like there, and price support, boom, right there. So some people could call this like, okay, maybe cup and handle on silver, right? So if that happens, then you just measure this and this 20% from the cup handle breakout, which would put the first target at 33.60. Right there, it's first target. Mark that, bullish target. If that doesn't happen, then you can just measure the actual consolidation zone if you want. That's negative 18%. If we lose that from here, that brings us back down to here, which would be a previous resistance zone. Okay, so that makes sense as a potentially bearish target. Bearish target. Now, if we add the trend lines in, okay, this one's a little bit trickier, so I'm going to zoom out to the weekly. And again, it's kind of, there is one not as strong though. There's this one, okay, so that we could draw that one. So again, could totally be a tightening range of this almost like ascending triangle type of thing, pattern right here. And it could very well bounce, right? The cup and handle plus this trend line support weekly. We'll see, right? Based upon the stock market earnings reaction. So those are the two levels on silver. US oil, next one. All right, this stream's going a little long, but we'll just keep moving here. All right, so again, US oil, very interesting. Obviously in an uptrend, okay? Starting again from November after elections, higher high, higher low, higher high, higher low, higher high in the price. Now though, we start to get, if you look left, because oil was in a super downtrend for about a whole year, now we're getting the reversal. So you see there's strong prior resistance and support levels, okay? So this used to be a resistance level. You see that over here and a support. Now this is a larger resistance level up top here. Now this became support on this side over here. You see that? So there's also one in the midpoint right there based upon this price cluster. So again, high, low, high, low, high. We get a little bit of pullback now. There's some market correlation. You get financials pulling back on bad earnings, or negative earnings, I should say, expectation-wise, Thursday and today in the market. And so the market's correlated. It's connected, right? You'll see pullbacks on gold, silver, oil, S&P, just almost everywhere, right? So today was a red day for the market for the most part. But again, it's not over yet. One day in the market is not the end of the stock usually. So we draw that trend line down there and you see now, okay, we have multiple touch points and we have one on the top as well, right here. So again, we could very well with the price go up, come down, and continue on depending on earnings. So let's get the first target in there. The first target really is this X marks the spot of $40 US oil ETF price. If that fails, then the next probably support I'm seeing right here is like 33.42 on oil. Okay, but it had to break below this trend line over here, retest it, and then end up there. So we could get W patterns. We could get double bottom patterns as such, right? Reverse up, you could just get a uptrend continuation scenario. You could get a downtrend forming. It just depends on the market and the reaction to earnings and what's happening in the market. All right, very quickly, UNG. Let me rechart this one because last time there's too many lines. So again, let's get the support and resistance. Support on the downside. Okay, so 839, 875. Resistance on the top side, price $10.18, 10.67. How did I pick those levels? Well, you look for as many touch points as possible, and there's not much on the left side here because natural gas is down so much. If you look on a monthly, it's just in a super downtrend for 10 years. But this weekly, you're getting this double bottom support area right here at $9 range. And that's why very interesting, suspicious looking chart on UNG right now with some, if everything goes right, like potential, 10, 20, 30% upside as an investor. Swing trading is different though, short-term trading. So let's try to get those targets. We're on the day chart again. All right, now, so we get trend lines going on the top as creating resistance, okay? And there's also one here like that. So again, it's kind of like gold in this downtrending, broadening, opening wedge formation, right? But the immediate target that I'm seeing, X marks the spot on trend lines versus resistance levels, about 1075, okay? If not, we can very well see a pullback down and retest the 842 and maybe even the 730 range, because we just measure this formation right here, 17%, like plus or minus 17% would be 1170, right? And minus 17% would be 823, this support down here, okay? So watch out for that on natural gas. It's trying to uptrend, right? If it needs to reverse, it needs to higher high, higher low, and then not go down anymore lower than the blue circles. And it needs to go up like that for a true trend change reversal. All right, that went pretty long. That was about 30, 25 minutes of USA stock market indexes and assets. So let's move on to crypto. Everybody's still thinking about crypto. All right, so this marks transition to cryptocurrency. So analysis. Okay, BTC USD, Bitcoin. Remember what I said last time? About the different scenarios that could happen on Bitcoin? Okay, and then one of those scenarios exactly played out. So we use the support and resistance to be our guide. Okay, we got resistance. Let me zoom in so people really see this. We have resistance at $40,824. Okay, and we created a support level at 33,897. All right, so the price is getting stuck in between here. If you zoom in, if you use intraday trading, if you zoom in, you're going to be able to draw more of a tight triangle, but I'll draw the broader one that I'm seeing. Okay, so for triangles, you need minimum, for anything, you need minimum 2 touch points. The more touch points you have, the stronger it becomes. But now I'm seeing the 2 touch points from experience. Here, okay, on the top, and there's one on the bottom forming as well, like that. Okay, so now we got our little triangle here. Little symmetrical triangle. Some people could call this a flag, right? Or tightening pattern, equilibrium. So I wouldn't be surprised if the price just bounces around in here until earnings is over. I wouldn't be surprised. Boom, like this, and just, tighten here, and we're either going to get a bull break or we're either going to get a bear break, depending on the market. But these are still strong resistance support levels. 40,000 basically. And then basically like 30,000 if you want to get big numbers. 35,000, and then 30,000. That's the weather outside in the background noise. So, maybe I'll mark that, and then 30,000. Boom, like that. So let's just get those 3 large psychological numbers to make it easy on the viewers, right? So those are our 3 targets over time. And so remember what happened last time? We were like stuck on this candle when I was talking. I think it's January 8th, right? Yeah, so what were the clues? Remember what I said is that if it's a hammer in the air, the candle's in the air, basically if it's this looking candle, okay, that means it did sell off initially to get down to this bottom wick, the bottom stick, right? But then bulls came and bought it back up and pushed the price back up. So it's a little bit of a battle between the bears and the bulls in the market. Okay, but what happened though? The next day on a Saturday, we get another candle, which is almost like a doji, almost as a hammer, but still, when you get this kind of stuff in the air and it doesn't go higher, right? The difference basically that I saw right now, the difference that I saw in last week compared to like 2, 3, 4 weeks ago is where are all the crazy crypto bulls, right? Not crazy, but where are all the buyers, right? It's all like all of a sudden they're gone. Why? Because there was a reversal signal. If you use intraday trading, which I try to do and try to show, but I'm more of a longer investor, but there is, this double top right here, right at the spot we're talking about, 40,000. So for traders, this is a bad signal. For traders, for bulls, right? So that's why everyone's like, oh, we broke this line, and then you start the downtrend, right? And then bulls just said, for bears, they're like, yeah, we're going to short that down. Then the patient bulls saying, okay, there's a support level here, right here in this range, and so they bought it back up. Okay, see that? Buyers then rallied up and then pull back down, and we created the higher low. Okay, higher high, higher low. Actually, this was a lower high, but higher low, and then continuation, right? Pull back here, and it's even a higher low. So it's basically stuck in equilibrium triangle right now. But there were subtle signs, even on a daily, even if I didn't have to go into the 4 hour, just from experience trading for a while now, is that when you see this up here, okay, and you could just feel it in the market when you start to lose momentum. It's like, oh, I get a little worried about that. Also, though, if you use moving averages, okay, I'll just use some short-term moving averages right here, for example, and you see the price is floating in the sky like that. That's what I like to say to people. When it's floating in the sky, I mean, it's not the average price anymore. It's not touching the line. It's not average price anymore. It's above average price. And so that's one reason how I was able to tell on the daily charts, just from experience, right? Again, and then we start to see this pattern, a little bit of a quasi, almost a evening star pattern of these triple candles. So studying candle patterns is very important. One single candle, double candle, triple candle patterns at least, right? It's because there's this pattern right here. 1, 2, 3, evening star type, not textbook, but it's the psychology is there. Then when I saw that, I'm like, I'm out. You know what I mean? As a trader, it's like boom, and then we pull back down basically 25% on Bitcoin. So it was definitely forecastable. Okay, 25% moves on Bitcoin are totally normal, right? In times of volatility. If you look left, this one to this one was about 20-25%. So it happened again. Then a bounce. Okay, so this is what we're looking at now. All right, a tightening triangle pattern. So for Bitcoin bulls to continue, we have to break and hold above $40,000, like I was saying last stream. Have to break out and hold above that. If not, we could continue sideways. This is scenario 2. We could continue sideways in the price until the market momentum or earnings is priced in a little bit, stock market economy, expectations priced in, and then Bitcoin's going to make a decision, right? Big money's going to make a decision at some point. So these are our 3 targets for now. The upside target resistance is basically the $40,000 range. Immediate support at $35,000, and then the big support level that hasn't been broken yet, it's been tested 1, 2, 3 times, is $30,000. All right, so again, I'll redraw this, okay, because I said last time we might get an M, we might get a lower high like this, we might start going to downtrend, so you just want to watch out for that. Is the price making higher highs or higher lows? Or is it making lower lows and lower highs? That's all we really need to know as investors on the stock charts. The tricky part, I was talking to my colleague the other day, the tricky part are the reversal spots. So let me just take a quick aside right here. It's loud weather outside. So let's look at right here, higher high, higher low, right? Lower low, lower high. The tricky part is, how do we identify the reversal? Like, how do we know it's going to top out? How do we know it's the top and I'm not accidentally buying the top of Bitcoin or a stock or ETF, right? So that's why support and resistance levels come into play, because if you realize higher high, higher low, this is about trend, right? If it starts trending, then the price goes like diagonal. You know what I mean? If it goes uptrend, it's like that. You could draw the trend line. Let me just draw it. Like pretend the blue is the price, right? You could draw that trend line, and then you could find support trend line on the bottom right there. You see that? But if it's downtrending, you can draw a diagonal trend line as resistance above. So support and resistance still very important. Okay, but how to help identify tops and bottoms in markets and in assets? All right, is support and resistance. So if you have a resistance here, like that, okay, and let's draw a support level down here. Let me do it like that. Okay. Right, then it just becomes a matter of, it's the psychology, it's visually confirming. You need the confirmation, like, okay, is the price going to break out and continue up higher? You know, imagine going higher like this, uptrend, or is it going to break out and have some trouble, some problem up there and then reverse down? Or is it just going to get stuck like that? Or is it going to make a real chart pattern, head and shoulders, right? So there's all this price pattern, candle patterns that people should be studying, or at least know, that it helps you identify in the market way, way faster than people who don't know, right? This is like foundational information, but it's a lot of people pass over this stuff and just say like, oh, give me the indicators, give me the tools. But for me, being an investor and longer term trader is actually, in my experience, I've seen the chart patterns have more power and strength in the market and reliability to get through the hard times. Especially, we just saw that in the past year with everybody thinking and saying so many different things in the stock market and crypto market. For me, all I do is I just listen and believe the price with my eyes and my mind. So that was that's a very, very important concept and lesson right there. That's why it's always important to draw support and resistance levels. The reverse is also true. I'll just do it real quick. Okay, flip. Actually, I can just move it around. We flip this around, right? Like, how do we identify bottoms in the market, right? How do we identify bottoms in the market? The same concept applies, right? If we draw a support level from, let's say there's a previous support level from like 2 years ago on this whatever stock or crypto we're looking at, but all of a sudden it reaches that support level price and it's like, it's not going lower than that. Then there's support. At least 2 touch points. You get 3 touch points, 4 touch points, very strong, right? You could get this, 2 touch points. Upside down head and shoulders, reversal signal, you get 3 touch points. You just chop around in there for like 6 months or 3 months, right? So then this becomes very, very suspicious on the charts and you get a reversal signal. Okay, but we can only really identify that really easy by drawing the support levels. You have to like visually draw it. Same thing with the resistance level, visually draw it. That's how I knew on Bitcoin there's a problem at 40,000. It's a psychological 40,000 large number. Okay, and then the price could not break above it for 4 days. Also, we had, like so much political tension and all this global situation all happening at the same time. And then you just feel it in the market as a trader, investor. All the buyers are gone. There's nobody left. It's like it's like a rocket ship flying up into space. Or if you just throw anything, you throw a ball up as far as you can. There's that certain point where it loses momentum, right? The ball's flying up and then it loses momentum and then you could feel the gravity, you could see it, and then it falls back down, right? So you could just feel it in the market, but also you see right here visually, right? We're getting multiple touch points. You see me draw this top side resistance level, okay? That's $40,000 or $41,000, basically close enough, right? Tested 3 times, rejected 3 times. So therefore, once traders, investors, algorithms, bots see, okay, we're getting rejected 3-4 times, I'm gonna sell, or people are gonna sell. I'm talking about the other traders and investors, right? So that's exactly what happened. And then we draw that support down here. There's a support level right here at 33,000, and then also at 31,860. And then where did it go? You see right down here, crash, crash, crash. Boom, see in this zone of the support level. All right, so these levels work. It went from this resistance down to this support in a matter of 4 or 5 days. So that's how we can, that's a lesson right there on support, resistance, candle patterns, trend lines, price. And this applies for any stock or crypto that exists right now. Actually, for almost forever, right? So there's that lesson. Okay, last thing is I didn't draw the larger trend line here. So we'll draw it like that. See that? Now it makes perfect sense to everyone visually. You draw this trend line. Let me tighten it up. See this yellow trend line acting as the uptrend support. Remember that example I just drew of this? Well, let me draw cleaner. Of this. And then you get the uptrend trend line support. Okay. Now just look right over here. If we look to our left, this is the same thing. Higher high, higher low, higher high, higher low, higher high, boom, and the trend line exists there. It was actually, if you draw it super tight, now you see exactly what's happening. Okay, trend line support, and then traders anxiously waiting to see, are we gonna get it bounce? Nope. Right? We broke it, and then traders are gonna say, you know what? Bots, everything's gonna kick in, and we buy that, and we push up, and now we're testing it as a resistance. It becomes the ceiling trend line resistance. Okay, and it got rejected down. We tested it. Traders saying, you know what? Robots saying, let's test 40,000. Go, let's go. Rejection. Again, if we study 3 candle patterns, there's another evening star pattern setting up right here, and now we're getting the pullback down over this weekend. It's all making sense now if you understand price, patterns, support, resistance, price levels. Okay, so hopefully that made sense. I'm not really going to go into in depth on all the other cryptos because, you know, Bitcoin is still the dominant crypto right now. You basically see the same pattern in Ethereum, right? I'll just do Ethereum. So basically right here, the resistance, boom, 1286, 1286. And see, this becomes a little trickier when it's like, well, where is the support here? Well, okay, we can look left. See, we look left. And you find some general zone. I'm on a weekly chart now. Okay, so 1400 was the target, like from the past. Then you have 1220. Then you have 1062. And there's probably 1100 in there as well. But when you get these strong runners up, right? It's like high, low, high, right? There's not much support, meaning we need some pullbacks to establish support, right? Support, like that. If you don't get that in the market, that's why crypto can crash like 50% in one day. It's possible, right? If enough people panic sell, robots shorting down, algorithms kicking in, totally possible. So don't be surprised if Ethereum starts crashing one day because it's already hyperextended compared to its low. It's a little bit of this FOMO, global FOMO, and people are like, whoa, let's go, Ethereum, and then all of a sudden it stopped. It's been so quiet in crypto, just, you know, usual day-to-day operations on crypto, right? So if we draw a trend line underneath, though, looking a little suspicious on Ethereum. See that? It is not anywhere near this trend line. There's a resistance. It broke out of resistance up here. See that? So the first obvious price cluster zone I'm looking at on Ethereum would be somewhere like in the $1,000, upper 900, 1,000. And then it needs to break above and hold above 1,400 to survive and go to all-time highs on Ethereum. If not, I'm expecting consolidation and pullback, meaning sideways or down. If we lose momentum, okay, that's just how the markets work. If once there's no buyers left or once there's no hype left, no more FOMO left, nowhere else to go. There's nowhere else to go with the price except down or sideways at least. All right, so we just want to watch out for that. on Ethereum. Just remember, okay, if somebody's, it's just just a note for people, it's educational, okay, is that if earnings has a negative effect on crypto, I wouldn't be surprised if we pull back down in this market. There's plenty of room to go down and still be in a long-term uptrend. All right, we'll just finish up now. If anyone has any requests, please leave a comment in the chat box or question in the chat box or in the comments below, and I'll add it into the actual analysis. I'm spending a lot of time right now trying to give people a little bit more education. In the future though, let's say if we get 10 stock requests, I'm just going to go do those like rapid fire back to back. But for now, it's just more about education right now until people start requesting certain concept or stocks or crypto. All right, so we'll just end on Asia stock market, and this is the third and final part of this live stream. Okay, Shanghai Composite Index, SHComp right here. Okay, again, we just draw these support resistance. Okay, there's a resistance here, and support and supports. Boom, 4 levels right there. Trend line, we got this one right here. See that basically touching these spots here, and that would make sense. So higher high, higher low, higher high. SHComp could very well hit this spot. It needs to break out above this resistance and get to the 3,700 level. All right, so that's the quick version of that. Hang Seng Index. Okay, I drew this last time where we have more about, actually this is not as tight. This is probably drawn on a weekly chart, so let me tighten this up. Let me just redrop. Let's do this version. We got resistance on top. We got support right here. Real simple. We got this support, this support. There's 4 levels where Hang Seng Index can go, right? High, low, high, low, high. Right here, trend line up. Okay, I'll just draw a trend line because it's uptrending. So again, if we're, draw this high, low, higher high, higher low, higher high, I'm expecting it right here, somewhere here in this range, in this price cluster, right? Maybe somewhere right in the middle there, because that was a very tradable area. Okay, it would make sense. Earnings, global issues, and maybe afterwards, when it's all done, we might bounce up. Okay, so the big resistance above right now is 29,000. Okay, and we'll see what happens. All right, next, Nikkei 225 index, very similar. So I drew, it's a little sloppy to draw it again. Nikkei 225 looks like at not the highest price of all time. So there's a mega resistance up here. Resistance. Then we get support, like that. So now we get long-term levels, and then there's one down here, but I don't think we need to draw that one right now. So we connect these, boom, like that. Okay, it's kind of a strange one, but higher high, higher low, higher high, higher low, higher high, higher low, higher high. Right, there's another trend line because it trended again here. It's almost like Russell 2000. It feels like that. Just a little bit more excitement, maybe based upon political and economic. Because right after elections, you see boom, right here. There's some good news. Literally elections, boom, like that. So Japan anticipating some kind of, they're pricing in the next U.S. president and the potential actions that can happen between these two countries, U.S. and Japan. All right. So again, if we look at a weekly, still in that uptrend, but it could pull back down here to 26427, right down there. So you want to watch out for that. Okay, meaning that the target could be here, downside target, bullish target has to break out here with the mega target, next target up here. All right, KOSPI, okay. So we get resistance and support. All right, so So here we go. We have a support here from the previous 2018. We have a next support here, next support here. Wow, that's weather rattling the windows outside really loud. Excuse that background noise, the weather. Okay, then we get supports and we got resistance here. It's really tight. But see, this is what I'm talking about. When you get a runner like this, there's not much support except for like right there. So it's not that super strong, but again, you have this like rejection. Again, you draw the resistance and the price gets rejected two or three times, 4 times, like, very suspicious on Kospi. Then you get the trend line going. This is only 2 touch point trend lines, so it's not the strongest trend line up. But again, X marks a spot. I'm expecting pullback maybe down to here, 2953. South Korea earnings is already, I think it already started, right? So should be well underway. There's a reaction to the US market as well, earnings. So we'll watch out for that. Okay, it's just real simple, 2 levels right there. But again, on a larger, if you zoom out though and think of this as one whole leg up, then another support level, if things go real bad, could be down here in the middle somewhere as a target. Let's see, how far do I want to go here? Let's do Australia. Let's just keep going here. Australia. The mega resistance up here, and then we have resistance up here. This is what I'm talking about on the charts, to be very, very sensitive to this. There means something is happening in the stock market and the psychology of the investors, right? Look at right here. There's multiple touch points. If you pull the resistance down, this thing is getting tested. 1, 2, 3, 4, 5, 6, 7, 8, like 9, almost 10 times in terms of the price crossing this level. So 6726 Aussie dollars is a very, very interesting resistance level, strong resistance level on the charts, immediate support right here. Then if we lose that, we look left for some levels, then some support in this zone and then this zone as well. All right, so, but the good thing is Australia is still in its uptrend. Okay, let's see if I can zoom out and get a stronger trend line from the bottom here. Yep. So, okay, see this now, it's just really, really not topping out, but just kind of rolling over, going sideways. Consolidation probably has to do with the pandemic, probably has to do with politics a little bit, global politics. And then, so it looks like this zone is going to be interesting, needs to break out of here. So 7,000 would be a bullish target to the upside. 6,500 would be a level to watch out. But again, longer term, the weekly pattern hasn't played out yet, but is it going to turn into a head and shoulders reversal signal down? Maybe. Is it going to turn into a double top up here? Maybe. Is it just going to keep going up? Possible, right? Or is it going to reverse down? Maybe chop around in here for a little bit. You never know, right? So I try to keep an open mind with that. On the daily, though, it is definitely consolidating. Let's just put this in a box. That's what I like to do. Just put the price in a box, and when it breaks out of the box, then it's significant. India, Nifty 50 index. Here we go. Right, this is very interesting. This is like a very good study of trend lines. Okay, because it's trending so hard up. It's diagonal. Just high, low, high, low, high, low, high, or high. Like that. And then there's a large previous resistance that became a support on this side. So I would probably just use on this chart, maybe just, whole numbers. The closest whole number is 15,000. Okay. The immediate support is 14,000. We got 13,500 and then 13,000. All right, as our potential downside pullback target. Right. So if you kind of look at the white price here, it's like, well, at some point, how many times do we pull back? Like once, 2, 3, 4. I'm expecting some 5th one over here at some point in time. Right? Could pull back like that and still be an uptrend. Totally fine. So the first downside target is 13,500. If this thing pulls back and then continues up, then eventually the upside target is 15,000. Let's just go to UKX and end here, because this is an interesting one where it went uptrend, downtrend, uptrend. So to me, it's a much more longer term pattern. All right. I'm going to leave it on line charts. So it's easy to see this pattern. All right. So we have resistance, mega resistance at 7,696 pounds. And then we have the support here. There's another resistance here. You see how many price touch points over here? Resistance at this area. And then there's support down here. Those are the levels I'll draw for now. So trend line, there's a larger one, just a 2 touch point trend line. And then a 2 touch point up here. Okay. So I wouldn't be surprised if we pull back, because on the short term, high, low, hold on, high, low, high, low, high, and then just pull back right here down to the 6661, like boom, right there. You know, just like a high, low, high, low, high, low, higher high, kind of like a 7,050 right here. So this is downside bearish target, upside bullish target. So it looks like this is the UK reaction to right here, the election. Boom. Right there. Right here, there's an old trend line that was broken. Okay, so that's very significant. I remember drawing this for many weeks, many sessions, right? That's broken out. See how that works? Again, the resistance breaking out. Then you look to the upside target and then establishing a new trend. So I'm going to erase those, for example, and then draw the new trend line. Very, very steep. Very steep. So it could pull back and just bounce up, but we remember we have global earnings going on right now. Okay. So I'll wrap it up there. I'll wrap it up there for today. We went a little bit long. So thank you so much for watching. Again, disclaimer, these videos, charts, everything I'm saying is for educational purposes only. This is not financial advice. If you have a question, feel free to leave a question in the chat box, live chats or comments below. I'm hoping to get some more stock tickers that people actually want to see and hear about for future videos. So I hope everyone has a great weekend, and I hope this earnings season goes great or good for everyone and what they're expecting. So thank you so much. Have a nice day. Bye-bye.